Hello and welcome back everyone to this weekly update on the financial markets. I skipped 2 weeks of this update through to a backpacking vacation through Vietnam, but now I'm back on the desk making these videos like you are used to it every weekend. I will cover with you today the S&P 500 index, US oil, gold and Bitcoin against the US dollar as my 4 main assets, and here the add-ons marked in red, flagged here, the single stocks where the most stuff has happened or where action is necessary. Let's start directly in with the S&P 500 index, beginning with the weekly time frame. S&P 500 index on the weekly time frame, we can see we have an intact uptrend printing higher highs followed by higher lows. We reached, if we measure with the Fibonacci retracement tool, from the lowest point of the major movement to the last highest point before we have seen a major correction. We got this Fibonacci extension levels, and the first one is this here. Price already touched this. These levels act as take profit targets in a trade combination with this MACD cross on the weekly to the downside, which is a bearish sign. I'm a bit concerned that maybe this 10-week moving average will not hold longer the uptrend, and we will see a break to the downside and a healthy corrective move to the downside after a very huge and good run. That if that happens and we see corrective move here, that will not mean that the bull run is completely over. That's just healthy and can happen, and the uptrend later continues, in my view at least. Let's drop one time frame lower on the daily time frame. Here you can see that price action starts to cool a little bit off. The swings are getting not so extended anymore. MACD on the daily is crawling downwards since a pretty long time. This uptrend I have to change every time I have a new all-time high, so that's not saying so much, but yeah, it can really happen that we'll come down, maybe retesting the daily 200 moving average in combination with the prior all-time high here. There would be a nice setback level, even if that would mean that we'll fall 8%, 7% or something like that. It hasn't to be that much. At the 4-hour time frame, the lowest time frame I will cover here is also interesting, because we have here a 4-hour support zone in blue, which is aligning with the 200 moving average at the 4-hour time frame. So maybe we don't consolidate through price action, but instead through time. What does this mean? We'll maybe test this area, bounce up and down on it, sideways consolidation, and then breakout, and then continuation higher. Could be also a possibility in this very bullish market. And yeah, at the moment no trades for me in the S&P 500 index. I'm not long anymore. I got out of the trade with a nice take profit, but way too early. Wasn't expecting that it will run that high without a major correction. So yeah, at the moment no in a trade. I will not short this market. For shorting, this is way too strong. I would wait for sideways consolidation, drawing in a range in a breakout. That would be again tradable for me. Or we see a huge corrective move, we draw a downward line and wait for a breakout to the upper side of that to get again in a long trade. That's all I have for the S&P 500 index. Let's continue with US oil. US oil on the weekly time frame, we have a monthly red solid downward line. That one got broken to the upper side. Since then we are in a weekly corrective move. You could argue that you're seeing here an ABC correction. The orange weekly downtrend is still intact, slight violation here, but nothing significant. Maybe this here will be the lowest point of this ABC correction, but it can definitely exceed lower. There's a possibility still there. And what's bearish is that we have broken this weekly support zone to the downside. and we are still below the 200 moving average. On the daily time frame, the picture looks a little bit better. We had a daily downtrend, that one got broken to the upper side, we corrected lower, haven't seen so far a lower low, so this is the lowest point, this one is higher, and if we would now start to change from a downtrend to an uptrend here, that could be bullish or an early sign for a rotation in the major weekly trend here, again to the upper side. I would like to play that if the market gives me the signals. We have here a significant low, made a high that is lower than the prior one, and made now a higher low. If we exceed now the prior high to the upper side and make a higher high, then I would think that this downtrend is maybe over, or the likelihood is at least there. Would enter long position with 1% of my account balance at risk, stop loss below this higher low here, and aiming for 2-to-1 risk reward ratio, staying with that below monthly major resistance zone and the prior significant high here that was news driven back then. That's my setup. I'm not willing to short oil at the moment. I think it's pretty cheap already, and yeah, I'm hoping that this here confirms or start to confirms building a bottom formation and turning the trend to the upper side, even if that means that my gasoline will get more expensive if I have to fill up my car. And yeah, but for the trade it would be better. That's the setup. Next, gold. Gold on a weekly time frame looks beautiful after letting this major resistance zone behind. We started a major bullish trend for gold, printing higher highs followed by higher lows. The last major correction was a sideways time-based correction, and then we've seen the breakout. I also was trading that one to the upper side, was taking profits around this level. We are right now around $4,000 per ounce. I was take profit. I was pretty happy with that, even if we exceeded nearly $400 higher afterwards. That to me seemed like a blow of pop, at least for now. That's not meaning that I think we will see not higher prices the next year coming, but for now I think this bullish momentum has to cool a little bit off. We've seen a corrective move, we've seen a lower high, and now I'm expecting even a lower low, maybe building an ABC correction. This type of corrections happen pretty often in uptrends that would align with this daily major solid uptrend line in white, and maybe till then with the 200 moving average on the daily time frame. So for me at the moment, that's no long trade, but also no short trade. For that, the uptrend is way too strong. I would wait for this to confirm, and at this level here, I would get again interested and looking for possible long setups. Doesn't mean that that has to happen like this. We can pull off to the upper side if the fitting news come in, or geopolitically something spectacular happens. But if everything stays normal, that for me is the most likely scenario. The 4-hour uptrend is broken, getting retested, and is declining from there on lower. 200 moving average at the 4-hour also seems to break to the downside. So a lot of that speaks for my thesis, I will say. No actions for me in gold, but make research and decisions always by yourself. Next, Bitcoin. Bitcoin against the US dollar. There are my worries. I had such a nice trade, and now it's in a thick fat loss. Shit. Overall, the weekly looks fine. Higher highs followed by higher lows. Still everything intact. Here we reached the first Fibonacci extension level. If we measured from the last significant low to the last significant high, we had a retest, and then we are expecting a new move to the upper side. That one was coming. That here is the first take profit target. I was aiming even higher for slightly below the second Fibonacci extension. So far, we are pretty far away from that. We have a MACD divergence, a price making higher highs while MACD is making lower highs. So that here could have been seen through that. And yeah, I placed, in my view, the stop loss pretty conservative below this weekly orange uptrend, but that seems to get violated now to the downside. So maybe this is the all-time high for this 4-year Bitcoin cycle. I hope not, but ain't looking good. On the daily time frame, here you can see my initial trade entered here long, stop loss below this movement, aiming for a juicy risk reward ratio. And yeah, it looked fine, printing new all-time highs, $126,000 per coin, but then corrective move, breaking through this daily support zone in combination with the 200 moving average on the daily time frame. And then I said the next possible stop or hold for Bitcoin would be this weekly orange uptrend line in combination with the 0.618 Fibonacci retracement level measured from the low to the high of the movement. Even that one seems to get passed through right now. We have here the last line in the sand, this daily support zone from this prior price action here. If we fall below that, my stop loss of 2% of my account balance will be hit at $88,000 per coin. And I think the likelihood afterwards is that we will decline even further, make maybe a corrective move, and then the next logical hold or support zone would be the $72,000 level for Bitcoin. And yeah, there I would again get interested maybe in a long position, because let's measure it quickly. That would be a 42% loss from the all-time highs. But there's also no guarantee that we will not even test this monthly uptrend, because if that's the high of the 4-year cycle, we have seen 70-80% declines in Bitcoin. So maybe that would be still harmless in comparison to prior cycles. But we will see. At the moment, can't say much to this Bitcoin chart unless it's looking bearish right now. And yeah, I will monitor it closely and update you like always in my next video about it. So subscribe to the channel if you haven't yet. Let's continue with the single stocks that I have marked in red, so the important ones where something happened or has changed. A.O. Smith Corporation on the daily time frame. We can see the 3 similar scenarios. So I think it was planned and executed right, but even if you do it in trading, oftentimes you still get a stop loss. In this case, it happened also here. Was posting already about this in my community post on YouTube while my vacation in Vietnam. I lost 0.5% on this trade. Happens. And yeah, at the moment, no trade for me here. I will inform you like always if I see something interesting in this stock again. Next on the list, Berkshire. Berkshire Hathaway on the daily time frame. Trade is still ongoing. We had here this ABC corrective move after my entry level, getting slightly in loss position, but then this ABC pattern got broken to the upper side and is again an uptrend, printing with that higher low, and I moved my stop loss below this higher low, so reduced my stop loss around 50%. So I'm only risking right now on this trade 0.25 percent, 1/4% for making 1% in my account balance. Take profit level slightly below this upper band of this daily uptrend price channel, supported by the 200 moving average at the moment. Next on the list, BYD. On the stock BYD, I was canceling my trade setup I was setting up already, because I think we declined lower than expected. Even if we are picture perfect, hit the 0.618 Fibonacci retracement level. From there on, that would be a good spot to start now rising and getting above this daily downtrend line. We have this sideways consolidation, and if we see price getting above this upper band of the sideways consolidation in combination with the daily downtrend line, that got interesting. But I first want to see proper retest, and before then trading that to the upper side could look like the following. If it would happen like drawn in, it never happens like drawn in, but something similar, then probably my price target would be the prior all-time highs, and my stop loss would be below this retest, or if you like it more conservative, below the prior low of the whole movement. But then the risk reward ratio really declines and would probably not enough for me for a trade. That's all I have for BYD. So on hold, no setup at the moment, but could develop in the future. I will update you like always in my next video, so subscribe to the channel if not happened yet. Next, Gillette Science. Gillette Science Inc. just printed a new all-time high after even a good run. We have seen here an intact uptrend supported by the 200 moving average, and we formed even a bullish cup and handle formation. After breaking that to the upper side, I went long in the stock, stop loss below the handle formation and the 200 moving average in combination with this daily support zone near the entry level. So if you would like to take the trade as well, you can feel free, but make decisions and research by yourself, aiming for a 2-to-1 risk reward ratio, staying with that below the second Fibonacci extension level here. The Fibonacci tool is measured from the low of the movement to the prior high of the movement, and we have here the corrective move. That would be the handle, and from there on I'm aiming for the second Fibonacci extension level, risking like most of the times 0.5% of my account balance. That's all for Gillette. Next, EON. EON SE on the 4-hour time frame, because the idea was made up on the 4-hour time frame. We had here this 4-hour support and resistance zone in combination with the 200 moving average. We had this head and shoulders formation with the neckline broken to the upper side and a long position. Placed my stop loss below the 200 moving average, went nice into profit, but then turned. Uptrend was broken, 200 moving average was broken, neckline was broken, and stop loss reached, and I lost. I'm not sure. I think it was just 0.25%, so 1/4% in this trade, because it was happening on a 4-hour time frame with tighter stop loss, so I was not risking that much because of volatility. But yeah, they went into stop loss. Happens. Next, SMA. SMA Solar Technology out of Germany. It's a pretty volatile stock with huge moves and crashes, and yeah, all in common this weekly support zone where a lot of moves ended and started. So like this major crash here, I'm seeing here bottom formation. This one was forming nicely. We had then at some moment the 200 moving average on the daily time frame supporting this bottom formation idea. we had the sideways consolidation. This daily resistance zone was marking the top of that, and after breaking above that with a nice green engulfing candle, I entered a long position, stop loss below the sideways consolidation, or at least below the last major low inside that and the 200 moving average, risking 0.5% of my account balance, aiming for a 2-to-1 risk reward ratio. So that would be a plus in my account of 1% if we reach take profit, but staying far below prior highs. So pretty conservative and absolutely reachable in that stock, even if that means that it would nearly double to reach my take profit. Last but not least, Palantir. Maybe Palantir Technologies is last and least, because also that stock went to in my stop loss. I'm also like with EON, I was only risking 0.25%, 1/4% of my account balance, because the stock is pretty volatile and is highly overvaluated, at least fundamentally in my view. And yeah, but we had a nice breakout to the upper side. So breakout trade was there, uptrend was intact, stop loss was placed below sideways consolidation shop, and it hadn't worked out. Happens. Yeah, the idea consists, but only after new all-time highs, I would say. And so far, till that happens, we will probably decline further, maybe retesting this 0.382 Fibonacci retracement level. That would have been, but no, drawn like this. So maybe decline will not go that far. We will see. Maybe that meets up with the 200 moving average on the daily time frame would be pretty fitting. But with just a volatile stock and such high valuation, it can easily happen that we will see a retest of this weekly uptrend line in combination with this weekly major support zone and the 0.618 Fibonacci retracement level. All aligning up, so still possible. But I will inform you, like always, if I see an interesting setup in this stock again. That's all I have for this weekly update on the financial markets. I hope you enjoyed it again after 3 weeks break, and I wish you a good start on the week. Till next time, bye bye.